everyone. Welcome to the National Association of Real Estate Brokers, NAREB, State of Housing in Black America Forum. I am Chandra Patterson, Vice Chair of the Public Affairs Committee called PAC. Our role in this organization is to develop policy positions to evoke change that moves the needle in a positive direction for homeownership in the Black community. With these policy positions, NAREB is a force to be reckoned with as we collectively advocate to our legislators and leading industry stakeholders for the Black community and homeownership in Black America. State of Housing in Black America's acronym is SHIBA. SHIBA was born out of the need for this organization to tell our story about the racial wealth gap in Black America. It is a comprehensive report that exposes the concerning issues of foreclosure, neighborhood blight, and disaster recovery for Blacks. Loaded with data and statistics, this is no fake news. We have a powerful panel of industry experts on this forum to back it up. Our theme with SHIBA is restore stability, rebuild community, and retain legacy. So for those of you who are for the stats and numbers, you've come to the right place. And for those of you who are wondering what's the solution, you've come to the right place too. NAREB has a call to action to grow Black homeownership. So take out your pad and pen and listen in, because your Black homeownership knowledge is about to level up. But before we get started, we will open up with a word of prayer. With minds clear and hearts open, Heavenly Father, we give you thanks, we give you honor, and we give you praise for this awesome privilege to come to your throne of grace and mercy. We ask that you open our ears, minds, and hearts to receive the information you have allowed NAREB to share with everyone under the sound of my voice. Anoint and bless our efforts, the panel, the members of the Congressional Black Caucus, and the leadership of the National Association of Real Estate Brokers. Please continue to lead and guide us as we work to help your people. We stand on your word that eyes have not seen, ears have not heard, nor has it entered into the hearts of man, the things which you have prepared for those who love you. And we love you, Lord. In the wonderful and marvelous name of your Son, we pray. Amen. At this time, I would like to introduce to you our 32nd president of the National Association of Real Estate Brokers, the third woman in the history of our great organization, Mrs. Lydia Pope. Let's give her a round of applause. Thank you.
Thank you, Madam Patterson. I bring you greetings on behalf of the National Association of Real Estate Brokers. We thank you for joining us at our State of Housing in Black America SHIBA Forum. Let me first acknowledge our Congresswoman and CBC Chair, Honorable Joyce Beatty, the Honorable Secretary of HUD, Marcia Fudge, Congresswoman Maxine Waters, who's the Chair of the House Financial Services, Senator Sherrod Brown, Honorable Majority Whip Congressman Jim Clyburn, and all the congressional leaders on the Financial Service Committee and the Energy and Commerce Committee, in addition to those that are working on the Housing Infrastructure Bill. We bring you all greetings from NAREB. I want to thank the SHIBA Committee, the writers, our NAREB leadership for your hard work and commitment. We want to also thank our supporters, which is the Federal Home Loan Bank of San Francisco, for supporting the SHIBA report. NAREB, being the largest and oldest Black real estate trade association in this country, have been advocating for democracy and housing for Blacks for over 74 years. In 2011, NAREB introduced the State of Housing in Black America, known as the SHIBA report, to focus on the public and policymakers' attention on the unyielding disparities obstructing the growth of Black homeownership. Our goal is to engage our policymakers and regulators to advocate with us on the elimination of the systematic barriers Black consumers regularly face when they are desired to become homeowners. You know, the SHIBA report also provides a detailed view into the real numbers and facts that impact and impede Black families from realizing the dream. of homeownership. NAREB is committed to changing the statistics and bringing solutions to overcome these barriers. You know, our theme of restoring stability by closing the homeownership gap, rebuilding the community by educating and providing resources, and retaining the legacy to pass on the generational wealth supports our 5 pillars of building Black wealth through homeownership, in which SHIBA falls under those pillars. You know, over the years, NAREB has endorsed several policy initiatives and bills with many congressional leaders. NAREB has worked very closely with Congressman Gregory Meeks to develop a national initiative to provide homeownership down payment assistance.
Thank you, Congressman Meeks. We appreciate all that you do for the National Association of Real Estate Brokers and the community at large. We honor our relationship. Next, we will have Jim Carr, who is the Housing Finance, Urban Economic and Policy Consultant. He is also our SHIBA, State of Housing in Black America author. Mr. Carr.
Good afternoon. I am delighted to be able to represent the National Association of Real Estate Brokers again this year in being the lead author for Homeownership in Black America, the 2021 report. We're going to provide today a brief overview in the interest of time, but the report itself, I just want to reemphasize what had been said earlier. There is a lot of data and a lot of statistics, and this is particularly important year in large part because we're coming off of one of the greatest recessions in US history. In some sense, we're back to 2008, not exactly the same, but there are a lot of challenges facing Black homeownership going forward. And so we're going to go through a few of the highlights of what's been going on over the past year, particularly 2020 in particular. Let's go to the first slide. As you can see, we used 2004 as our benchmark because that was the year in which Black homeownership had reached its highest point in history, which was just under 50%. And interestingly enough, as you can see, Black homeownership began to fall in 2004 and continued right through the Great Recession. And so Black homeownership was already falling long before we hit the 2008 housing market collapse. It's just that Black homeownership continued to fall faster than other households. You'll notice something interesting in 2019. This has been one of the particular focus areas for this year's report. Black homeownership in the second quarter of 2019 and through the middle of 2020 experienced a remarkable turnabout. It had fallen to a low of 40.6%, which was lower than that in 1968, in the year that the Housing Act, the 1968 Fair Housing Act was enacted, and grew more than 6 percentage points. Well, that was phenomenal growth. The challenge for us is that that growth in homeownership is not reinforced by any economic data or housing market statistics. And so one of the reasons why this is very important, some might say, well, it really doesn't matter if homeownership is 45% or 40%. But I believe that we know in our hearts that really does matter, because if homeownership is at 40% or dropping down lower than 40%, it means we're going to a homeownership rate we've not seen since the 1950s. So one of the important questions we are wrestling with this year's report is trying to get a better understanding of exactly what is the homeownership rate for Blacks. And right now, it's in the mid 45%. Let's go to the next slide. As you can see, the share of originations for mortgages last year is a positive in a sense for Blacks, in that Blacks are 7% of total originations. And that is the same level we were in 2004, which was the year of the highest Black homeownership rate for Blacks. What's interesting, however, is that Blacks are between 12 to 13% of the US population. So as you can see in that slide, Blacks are still substantially below their share of per population in terms of mortgage originations. And as you'll notice, the largest growth was in non-Hispanic, was in Hispanics. And that is largely reflected, I think, by the growth of the Hispanic population in the United States. So as you can see, as a share of total originations, we still have a long way to go. Let's go to the next slide. This slide shows some very positive data. We were very pleased to see that if you look at applications and originations, both are trending upward and have been so for the past few years. So this is very positive. And in fact, the most positive, I think, is the applications, which have grown substantially, particularly over the last 3 years. I think the National Association of Real Estate Brokers can take a lot of credit for that, because one of the themes that they have reiterated repeatedly is that you can't get a loan if you don't apply for it. And so the fact that applications are up substantially in both the conventional and non-conventional markets is very, very good news. The challenge for us is that while originations are also increasing, they are increasing at a lower rate. This again goes back to my statement about the dramatic rise in measured home ownership rate by the Census Department. It is not reflected in terms of loan originations, because as you can see, that's a pretty smooth upward trail or trend. Let's go to the next slide. Now, one of the things that's very interesting, we used to follow a lot, and we still do, is denial rates. Notice that the denial rates going into last year actually continued to fall through 2020 for non-Hispanic white households, but for Blacks appeared to sort of flatline between 2019 and 2020. Again, you would expect that if the home ownership rate was going up, the denial rate would be going down. One of the measures that I'm very proud to work with NAREB on is that we realized years ago that looking solely at denial rates really didn't give us a fully accurate picture of the extent to which Blacks were actually applying but not receiving loans. So we use a much broader index. Let's go to the next slide. That broader index is one that allows us to look at 3 major reasons why individuals may not actually take out an origination, even if they are approved. And the one that is really interesting is looking at that very, very substantial difference in loans that were either withdrawn or were incomplete. As you'll notice, the big difference is that Blacks have about 5 percentage points, or if you turn that into a percent of a percent, about 30% higher level of having loans withdrawn or the files closed. This is something that we've said we need to look at very closely. And it's something that we are examining with this year's report quite closely. And again, I'll just reiterate, when you see that substantial differential in loans not ultimately succeeding as originations, then again, it's not reinforcing that dramatic uptick in home ownership rates. Let's go to the next slide. This slide, I think, is really powerful, because what it allows us to do is look over time, going back to 2004, and we see the very, very powerful and very positive reality of denial rates falling for Blacks almost consistently since 2007, which is a very positive indicator. But you'll see that downward slope in recent years is being compensated for by those loans that are being withdrawn. So again, this is a very, very important issue that we're focused on this year. Let's go to the next slide. You'll see this trend is similar for Blacks and whites. The difference is for whites, while the trend lines are similar, the actual levels are much, much less. Let's go to the next slide. This slide shows within the metropolitan areas with the largest Black populations, the 10 areas with the largest Black populations, you'll notice that there is something called Dissimilarity Index. That Dissimilarity Index is a reflection of the level of segregation in those communities. And as you can see, segregation remains extremely high in the metropolitan areas in which Black households tend to most heavily concentrate. The reason that this level of segregation is such an important issue is that research shows by multiple research institutions that Black households still tend to be penalized by something that was termed many, many years ago by a Brookings researcher called the Segregation Tax, which is Black households or Black homes, or homes in Black communities, excuse me, tend to be undervalued relative to houses in white communities, even when all major characteristics of the houses in the communities in terms of location are the same. So this issue of appraisal differential and unfair appraisals in Black communities is also an issue that we discuss at some length in this year's report. We can go to the next slide. As you know, the wealth gap between Blacks and whites is very substantial. And it's one of the reasons that we focus on homeownership as such a critical issue. Research shows that if we were able to level the homeownership rates between Blacks and whites, we could potentially close the racial wealth gap between those two demographic groups by as much as 30%. And then if we could purge the discrimination that occurs in the appraisal process such that Black homes are valued in an equitable manner as white homes, we could close that gap perhaps another 10 percentage points. So the work that's being done by the National Association of Real Estate Brokers actually is the pulse of the largest potential wealth gap closing tool available to us from a public policy perspective, potentially being able to close that gap by a full 40 percentage points. In this year's report, we look at something that we have never looked at before because it's always got our attention, but we never thought to measure it. And that is the added wealth through home equity that's gained through the refinancing process. So we know that in 2008 and 9, there was a very powerful refinancing program, HARP, that was available to borrowers who had loans from Fannie Mae and Freddie Mac, and for whom the majority of Black homeowners were not eligible because their loans were not held in the conventional market. Looking at last year, we decided to take an examination of how much equity was saved by households as a result of the near historic low interest rates that were experienced. And we found that through October of last year, roughly $5.8 billion was saved through refinancings. Of that, a mere 198 million compared to 5.8 billion went to Black households. This is a policy issue that we have not focused on in the past, but in this year's report, we're adding it as a critical issue. And the issue is, how do we help Black households access the refinancing market in a manner that is equitable to those of non-Hispanic whites? Because when we don't do that, we are allowing Black households to fall further behind on their home ownership returns or their returns to home ownership. It's something we must address from a public policy perspective. Let's go to the next slide. This next slide shows unemployment for 2020. And as you can see, Black unemployment over the course of last year was higher for Blacks than for whites. We all kind of intuitively know this, so this is not surprising. But there are a couple of statistics that are not shown by looking purely just at higher unemployment. The reality today is that while Black unemployment is improving, and we discussed this somewhat at length in this year's report because the economy is so important because we're coming out of another recession. What's interesting is that roughly 44.5% of Blacks who are currently unemployed are long-term unemployed. And we suspect this may have a lot to do with COVID and the fact that Blacks were more likely to have COVID and therefore may have suffered longer than non-Hispanic whites as a result of it. But roughly 44.5% of Blacks are long-term unemployed, which means they've been unemployed for 6 months or longer. And as you know, the longer you are unemployed, the more difficult it is for you to re-enter the labor market for a variety of reasons. A second issue that isn't shown here is labor force participation rates. So the unemployment rate would actually be higher for Blacks if in fact the labor force participation rate hadn't fallen, but because it's fallen, there are fewer Blacks in the denominator. And so Blacks experience, again, probably as a result of COVID, more Blacks actually falling out of the labor market than whites. And one of the big challenges here is that the federal government responded to last year's recession in a way that was extremely powerful with its unemployment and long-term unemployment support. Those programs now are all winding down, which brings us to the next slide. This slide shows that beyond unemployment, when a survey was taken asking how much do you feel that the recession is impacting your economic future, you'll see that Blacks were second only to Latinos in articulating that they were experiencing severe financial problems. And so this slide, I call this the wild card regarding the future of Black home ownership for three reasons. One is we know that we have high unemployment for Blacks and challenging unemployment to the extent that a substantial share of it is long-term unemployment. And we know that the forbearance, mortgage forbearance programs are now winding down. So a question that we don't know is the extent to which Blacks will be able to make their mortgage payments when those forbearance provisions are over. We do know that, that it will be challenging. We just don't know how challenging. We know that Blacks applied for forbearance protection at a rate that was roughly similar to whites, but whites are improving their employment status faster than Blacks. A second question that we have is that we know at the same time over $900 billion of student loans, federal student loans, are also in a forbearance program. And Blacks disproportionately are burdened with student loans. Student loans is a specific issue addressed in this year's State of Housing in Black America and will be talked about later. And so we cover this in our report documenting the potential student loan crisis. And then, as I said, the third unknown or wild card is that with so many supplemental programs winding down, including support for small businesses, it's just not clear what the ability or how Blacks will be able to move forward and pay their mortgages once all of the forbearance and subsidy programs are wound down. And it's something that we will need to seriously focus on as a Black community as we go forward to preserve home ownership. And then let's go to the final slide. In the final slide, we see that there are a number of contributions to racial inequality that existed before and will continue into the 2020 pandemic. As I mentioned earlier, home ownership is the single most important instrument that is available to us to close that racial wealth gap. And the report includes some very specific recommendations that will be presented to you in a few minutes. I want to encourage you to read this year's report because there's only time for a brief overview of all of them, but we do spend some considerable time not only with the recommendations, but placing those recommendations into a powerful, statistically driven context. And with that, I'll let that be the end of my presentation. Thank you very much.
Thank you very much, Jim. We truly appreciate all the research and efforts that you've done surrounding the State of Housing in Black America report. And we look forward to the publication being released. Next, we will move right on into our next speaker, which is Maurice Jourdain Earl, who is the Managing Director of Compliance Tech. Mr. Earl.
Thanks again, Ashley. It's a pleasure to be here today. And following Jim Carr, I want to extend some of the things that he talked about, but especially to focus in on Fannie Mae and Freddie Mac. They are the anchor of the mortgage market. They buy more than 60% of all the mortgages originated in the country. In addition to that, they are buying loans from just a handful of lenders. Even though they were chartered by Congress to do and provide stability and ongoing assistance to the secondary market for residential mortgages, I want to make it clear that their activities in providing these funds for the secondary market, in effect, becomes a government subsidy. That is, they're taking the loans out of lenders' portfolio as they originate them and offloading that risk by buying those loans in the secondary market. The problem is, however, that one, those lenders are not making many loans to Black people. Matter of fact, 65% of all the loans that Fannie and Freddie buy almost historically has been consistently about the top 25 lenders. And so in other words, the top lenders, the biggest lenders in the country, are the ones who are receiving the benefit of this government support for originating and buying loans. Now, when we look at it from the standpoint of the differences in wealth and income, it really, really brings the story home. And that is the differences by race. Over the last 17 years, the white share of loans purchased by I call them now the enterprises as opposed to government-sponsored enterprises, because they've been in conservatorship, if you will, since 2008. No company, no institution has been in conservatorship for that period of time. Moreover, they are making a ton of money. Matter of fact, first or second quarter of this year, Fannie Mae made upwards of $750 million in net income. But the share of loans that the enterprises have purchased from white people over the last 17 years is 80%. Compared to that, only 4% have been purchased from loans that went to Black people. In addition to the racial disparities, there is an income disparity. 76% of the loans that they're purchased are from middle and upper income home buyers. 88% in middle and upper income census tracts. Beyond that, when it comes to minority communities, 70% of the loans that have been purchased by Fannie and Freddie are in census tracts that are less than 30% minority. Those numbers are frightening when we start talking about the ability to close these gaps of home ownership rates, close the income gap and the gap in healthcare, the gaps in employment. Home ownership does become the anchor for all of that, which is why the activities that NAREB is doing is so important. But when we look at the numbers, overall, relative to other groups, the mortgage lending industry literally originates a very small number of Black loans. Moreover, after controlling for loan types, the enterprises purchase Black loans pretty much close to the rate in which they are originated. But here's the problem. Based upon their underwriting and pricing guidelines, the industry originates very few Black loans, particularly of the type of loans the industry buys. And here's the key. Lenders who originate Black loans, the loans are disproportionately government-backed and or subprime. HMDA data shows that lenders who do not make government-backed or subprime rate loans make very few loans to Black people. So in reality, what we're dealing with today, and we have been for an awful long time, is that there's a dual mortgage market. One white, one Black, separate and uneven. In the end, Black people, if you get a loan, they pay more. But the real question is, how do we change all of this? You know, it's the dynamics of that change is where things need to really begin to take form. And I'm going to challenge NAREB to begin to do the things that, as an organization, to lobby Congress, to lobby Fannie and Freddie, to lobby your community to step up and begin to reclaim our community. It's time not only to sell real estate, but to buy some real estate. There's no need for us to continue to complain about gentrification. We need to form groups to go in and buy that very property ourselves. And in that, you know, we can begin to change the landscape of what lending looks like in America. I am thrilled with the opportunity to begin to really focus in on that, because I think that's part of the key in terms of moving things forward. We've got the power. We can use that power. We have to claim the fact that we are Black. We have to claim the fact that we can move on and have these conversations on the Hill, and that we can make a difference by virtue of forming relationships with all the chapters around the country and having a force to make these lenders do what they need to do to make credit available for people to begin to buy homes that becomes that foundation for building wealth. It should be a prerequisite for every lender to produce a report as to what is their distribution of loans by race, as a prerequisite for being able to sell loans to Fannie Mae and Freddie Mac. Because right now, again, using taxpayers' dollars, they're buying loans from lenders that are redlining Black communities, that are not making loans to people of color. And again, it's a function of us standing up to find out exactly what's behind the screen. If we know that some of the large money center banks or large mortgage companies are not making loans available and not making credit accessible to the realtors to sell a house to some of their customers, you need to know that, because them buying a loan is a taxpayer government support, no different than the bailout when the markets crashed in 2008. It's been that way, and it will continue to be that way until we stand up and know what's behind that HMDA data. And the data are there for us to understand those dynamics. And if we do, we've got a track to run on. We know who the good players are and who the bad players are. So again, I thank you for the opportunity of speaking, hopefully, truth to power, so that we can continue our efforts to make something happen in a big way.
Thank you, Maurice. We truly appreciate all of your hard work and efforts. And we do receive that challenge on a daily basis at the National Association of Real Estate Brokers. Thank you again. Next, I have the honor and privilege to introduce Lisa Rice and Nikitra Bailey with the National Fair Housing Alliance. Lisa Rice is the President and Chief Executive Officer, and Nikitra Bailey is the Senior Vice President of Public Policy. Welcome.
Thank you so much, Ashley. I'm actually going to kick off our remarks today, and Lisa, as our President and CEO, will wrap us up. So we are clearly excited to be here with NAREB. We appreciate the opportunity to continue to partner with you, especially under the leadership of President Pope. So let me be really frank. We are holding back our economy. These disparities in housing are really hurting the economy. The data tells us that because of discriminatory practices, particularly and included in housing, the US economy actually lagged by $16 trillion. So if we focus on addressing these disparities, and we do the kind of things that are going to require a sense of courage and urgency, we actually have a chance to grow the economy by $5 trillion over the next 5 years. So like, let's make it perfectly clear. Racism actually is a drag on the economy, and it actually hurts the economy. So taking the kind of public policy actions that we're going to propose today are not things that we should do because they're nice or because they are things that, we are feeling benevolent about. They're things that we should do because, quite frankly, the economic standing of our economy is just really based on them being very successful. So we've got into this situation because of very intentional practices that created these racial wealth gaps that Jim went through, and the economic challenges that we see and the homeownership gaps. So we need that same level of intentionality to actually undo those practices. And I'm being very specific when I say intentionality, because race neutral policies are not going to be enough. We are experiencing a recovery that is uneven. During this K-shaped recovery, we've seen existing homeowners net more than $1 trillion in new home equity. So for the Black families that are locked outside of the housing market, they are not appreciating that type of economic stability. We know that this COVID crisis has had a disproportionate impact on us, and this crisis has really magnified the levels of that systemic injustice that's so rooted in our housing policies. So now is the time for us to really be very intentional about creating race-conscious solutions to the challenges of the day. So we can no longer try to do, this rising tide lifts all boats, because we know for our communities, it's going to leave us behind. We have to be very intentional about moving the needle and including race-conscious solutions that not only are good for Black and Brown communities, but that are good for the economy overall. And there are two things that we are promoting at the National Fair Housing Alliance that will allow us to do just that. The first one is we are promoting the Down Payment Toward Equity Act. We've partnered with our friends at the Center for Responsible Lending to do an analysis and to put together a proposal that shows that if you create a targeted down payment assistance program focused on first-generation home buyers, we have the chance to really grow home ownership by 5 million new home buyers over the next 10 years. And that by doing that, we would increase the number of Black home buyers by 1.7 million new home buyers. We would also increase the number of white by 1.4 and Latino by 1.32. So this targeted down payment assistance program would really bring in, we keep talking about these Black millennials who are locked outside of the marketplace, ready to jump in. We know that credit scores and an inability to really save for a down payment and the kind of challenges related to that really factor into keeping Black millennials on the sideline. And Jim mentioned earlier a lot of the issues related to student loan debt. So if we jumpstart this investment, providing $20,000 to these home buyers to really jump into this housing market, we would do a service by really igniting the activity and really speeding up what's going on in the housing sector, because we know that the future of the market is comprised of Black and Brown borrowers going forward. So again, this is not something that we should do because it's a nicety. It's something that we need to do because it'll provide overall economic growth. The second thing that we need to do is we need lenders to really think about who is it that they are underserving. The Equal Credit Opportunity Act allows lenders to create special purpose credit programs for the borrowers that they are not serving. So lenders can be very intentional in designing a program to really target those borrowers. And there is a recent Washington Post piece that the National Fair Housing Alliance just gave a lot of background for that really lifts up the strengths of how special purpose credit programs can really go a long distance and close in existing racial and homeownership gaps. And the critical point here is that they have to really be race focused. We cannot have these place-based solutions that have not really closed the economic and the racial wealth gap. We actually have to be very specific and focus in on closing it with intentional policies. We know, again, that rising tides don't lift all boats. We cannot leave this crisis leaving Black and Brown communities behind. The last time we did that, we experienced as a nation a great recession that put all of us in economic peril. And I will conclude my remarks there. Thank you.
Thank you so much, Nikitra. And I have to thank my friends at NAREB for inviting us to comment and participate in this excellent panel with our other colleagues. It's been an honor to work with President Pope and the rest of the NAREB team to address racial equity issues in the housing arena and to help expand homeownership access for people of color. I just want to touch on a couple of issues that we've been focused on, and it really intersects with much of the work that we've been doing with NAREB over the years. And it's also work that's highlighted in the SHIBA report. The first relates to kind of an old legacy issue. It's continued litigation that NAFA and our members have been addressing against some of the world's wealthiest corporations in the REO space. Our years-long investigation, in over 30 cities throughout the nation revealed really troubling evidence of differential treatment and disparate impact discrimination as it relates to how financial services providers were maintaining and marketing foreclosed properties during and in the aftermath of the foreclosure crisis. And essentially what our investigation found, and for those of you who've been tracking this, you know this information well, that homes that were located in Black and Latino and other communities of color were poorly maintained, while REOs that were located in predominantly white communities were very, very well maintained. The reason that this issue is so important still today is because we're, quite frankly, still grappling with the effects of these discriminatory practices and policies. Our research as a result of our continued litigation has found a couple of things. That poorly maintained properties have a high proclivity for being sold to investors. Conversely, well-maintained properties have a very high proclivity for being sold to owner occupants. And as a result, communities of color that once were very solid homeownership neighborhoods are now solidly investor communities. And you heard Jim talk about some of the impacts about that earlier. Moreover, all US households who lived in close proximity to a foreclosure lost about $2 trillion in property value. Now, this isn't people who lost their homes. These are people who lived near folks who lost their homes. And what that has meant is that Black and Latino households experienced more than half of that total loss because they realized over $1 trillion in lost equity in terms of their the homes that they owned. The challenge that communities of color are still facing today around appraisal bias, which you heard Jim and Maurice talk about a little bit, and then inequities in property value is tied to this discriminatory practices that we uncovered during our investigation. So for example, some financial institutions engaged in practices that resulted in the artificial devaluation and the suppression of property values in communities of color. And those communities still have not bounced back from the loss of wealth, the loss of home equity that they experienced during the Great Recession. This is critically important because we may be seeing a new wave of foreclosures as a result of the COVID pandemic and economic crisis, and we have to ensure that the discriminatory practices that we saw during the Great Recession are not repeated in this particular economic crisis. The disparities that we're seeing in homeownership rates are also tied to the discrimination that we covered in that years-long investigation. Today, as you've heard, the Black-white homeownership gap is larger than it was when the Fair Housing Act was passed over 50 years ago. So we have a tremendous amount of work to do to make up all of the ground that we lost, and then also to bring communities of color and families of color into some sense of parity with our white brothers and sisters and counterparts. Now, one of the other troubling things that we have realized as a result of this investigation is that all of that biased data, all of that discriminatory information is now a part of the sort of data lexicon, if you will. So it's a part of the data that we're using right now in the marketplace to build and design technologies, what we call prop tech. So these are technologies that we use in the housing and financial services space. We're often told that technology is a great equalizer, right? That technologies are objective and that they're a non-biased way to provide services, but that's not the case. We are seeing bias in credit scoring systems, automated underwriting systems, automated valuation models, and other forms of prop tech. For example, Blacks and Latinos are paying about $765 million in extra fees every single year because of inherent bias in risk-based pricing systems. So we have to be, as Nikitra said, intentional about creating methods for both identifying and eliminating bias from the technologies that we're using in this effort. We are not gonna ever reach that goal unless we eliminate bias and discrimination from our marketplace. And that is something that the National Fair Housing Alliance is committed to doing. And we're just so glad that we have you all at NAREB as partners with us in that effort. And thank you again for having us.
Thank you, Lisa Rice and Nikitra Bailey with the National Fair Housing Alliance. We truly appreciate our relationship and all the hard work that we have done together to fight the barriers to Black homeownership. Again, I want to thank Jim Carr and Maurice Jourdain Earl for all of your hard work and sitting on our panel today. The National Association of Real Estate Brokers is advocating on 3 specific policy positions, and I will run through them as quickly as possible. Number 1, we are looking for the Down Payment Restorative Justice Fund. This is where down payment does not come at a penalty or a punitive damage. Oftentimes we see predatory terms coupled with down payment, which makes many of our people in our community not take advantage of the funds that are available. So we are truly looking for a Down Payment Restorative Justice Fund. And in that fund, we are asking for $100 billion for down payment toward the Down Payment Toward Equity Act for the housing infrastructure bill. That is something that we believe will do some phenomenal works in moving the Black homeownership rate higher. Next, we are looking for student loan calculation reform. There has been some great movement and great conversations surrounding this. However, we have to continue to advocate for reform. If you think about a mortgage, applying for a mortgage, is done basically like a photograph. You take a picture of your credit, you take a picture of your income, and based on what is occurring today is how you are either approved or denied for that loan. Student loans is the only thing that is based on a projection. If you are in a deferment or a forbearance, you do not, as of today, have to make a payment, but we're going to project that payment going forward. So 1% of $100,000, we would project $1,000 a month, and that's what you would have to be qualified for in order to purchase a home or to refinance your home. So we find that that's inconsistent, and we'd like to see more consistency in terms of that guideline as we move forward. So if we're going to project, then I would say that it would be fair to project income is going to rise because of this degree that the person has received. And last but not least is our elimination of loan level price adjustments. By definition, loan level price adjustments, LLPAs, also referred to as, are risk-based fees assessed to borrowers. And I think we've heard several of our speakers speak about how much wealth is lost in this fee assertion. So what we like to see is the complete elimination of it. If you qualify for the loan, then there's no punitive excessive fees that are going to be applied to you. The fees are already assessed, the risk base is already assessed in the private mortgage insurance, the PMI, related to the loan. So we definitely look at this as double taxation. So those are our 3 policy positions that we are fighting for. Please note that NAREB is fighting for all barriers, against all barriers in the Black community. And with that said, I'd like to bring forward our national president, President Pope.
Thank you, Vice President Thomas. First, let's thank our panelists, our writers, our supporters, the members, the SHIBA committee, and our leadership. I want to also thank our viewers. Thank you for listening to our State of Housing and Black American Forum. You know, you've heard the concerns, you've heard the statistics from our powerful presenters. But you know, we want you to hear more. So we want you to look out for our full SHIBA rollout that's going to be upcoming at our upcoming Black Summit this year as we unveil the full report with all the recommendations and all the solutions. You know, you can go on our NAREB.com website to find out more information. And again, we want to thank you for joining the National Association of Real Estate Brokers 2021 SHIBA Forum. Enjoy the rest of the conference.